time for another stock review, this time 23andMe. And we're back to the laboratory once again, and we're looking at genomics. We're looking at sciences. This is going to be interesting, this. I think you might find this interesting and see if we can make some money from it. So turn on the money printer. Does it all stack up as we scratch our chin and do the maths on this one? 23andMe. And we're also, during our review of this stock, going to give you the opportunity to, oh yes, dance with a Dallas cheerleader. Yep, I recorded a pop video over the weekend, and we've got a trending thing here going on, and you can take part in our latest trend. We'll cover all of that in a minute. But between now and then, though, we're going to start off with 23andMe and work out, first of all, what it is. So without further ado, let's get straight into it. Tap the like button. Have you tapped the like button? Have you hit subscribe and ring the bell? Have you done that? Okay. What is 23andMe? What is it all about exactly? Let's start off nice and basic. During this video, you're going to see lots of information, including dancing with our cheerleader. We're going to show you the website for 23andMe. We're going to give you the latest news on the stock, a back test, very, very important. There's no dividend here. We're also going to share with you the balance sheet, the ins and the outs of the stock, so you can see who's buying, insiders, latest news, intrinsic values. We're going to give you the balance sheet, the profitability, the loss, solvency scores, whether you should buy it or not. That's entirely up to you. Remember, I do not own this stock. I only own the S&P 500, and I'm consistently beating the market because I'm in margin at the moment, but paying it down. And we also have a Meet the CEO series. So if you'd like the CEO of 23andMe to be on the show, you can do that. Simply email investor relations, invite them on the show, and I'd love to interview them and to find out more about the company, alerting and showing the world all about their wonderful company, assuming it is, of course. If it's not, I'll say so as well. Right, let's get straight into it without further ado. Have you tapped the like button? Have you done all that? Are you ready to rock and roll? Okay, let's get straight into it, and let's start nice and simple. Here we go. So let's look at the overall basic line chart first of all. As you can see, 2020, it popped up and it has a few pops. So straight away we can see it presents itself as a trading stock. It's heading down, obviously. Now it's massively down to where it was. Doesn't look like it's had a reverse split. Doesn't look so, because its highest was 16. So this will be interesting. Maybe it has. If it falls below $1 for a period of time, so let's have a look. How long has it been below $1? Since getting on for like 10 months, 8, 9, 10 months. So I guess it's had a reverse split. I don't know. I would assume it did. Anyway, it's normally a limited time, but companies can apply for extensions and all sorts. Don't take anything for granted. What is the company? 23andMe is a consumer genetics and research company which engages in assisting people to understand and benefit from the human gene. It operates through the consumer and research services, the Therapeutics segment. Show more, we'd like more. The consumer and research services segment consist of Personal Gene Service, the Telehealth Business and Research Services. The Therapeutics segment focuses on the genetics insight of genetic and phenotypic. This always gets me when we have any of this kind of stock, but I'm reading it live, so I'm not a scientist, I'm not a doctor, so I apologize for my pronunciation on the scientific terminology. The company was founded by Wojcickiin, I hope I got that correct, 2006, and is headquartered in South San Francisco, California. The listed name is ME23andMe. There's Anne, the CEO. Would love to have you on the show. Please email Anne at Investor Relations on the company website and tell them about the show. We often rank #1 for the stock and would love to have her on the show. 582 employees, San Francisco, California, 2006. Very risky, 100% maintenance if you're using margin to buy this stock. 207 million is the market cap. Okay, so it's a reasonable sized company, but still very, very small in this sector, and it's been around, of course, for 4 years. Price earnings ratio -31 cents, so it's losing money on your investment. Dividend, no dividends at the moment. Average volume 7 million. Today's volume 98,000. So no volume today. No, expect no short squeeze today. All right, 52-week low 35 cents and 52-week high $2.03. Okay. Now this is interesting. I like to use this. Let me make this a bit smaller. Let me go over here. On our app here, we can see some trends. If we scroll down here, very interesting. It's a new service provided by Robinhood. We do like it. By the way, if you click below, you'll find my link to Robinhood. I only want one more person to get the gold plan on Robinhood, and I'll have a solid gold credit card, and I will share the money I get from that with you if you click on it and then prove to me via Discord that you used my referral. You'll get free stocks as well, but if you share that with me, I'll share that with you when and if I get it. Right, so hedge funds, you can see Q1, we've had a little bit of interest from hedge funds starting to buy in. Let me have a quick look. Who has been buying in? You can see in Q1, let's have a look. Who have we had? Reopened a position, Kenneth Tropin, 91,000 shares, and Wexford Capital LP, Charles Davidson, closed a position at 23,000. What about insiders, those at the company? Well, as you can see, back in between August and October, they were buying. Why you see the buying and selling, by the way, that is tax automated positions. You can see there, look, unformative buy, uniformative buy. There are certain transactions. If we go here, look, automatic buy transactions. What this is simply a tax position. Those at the company making very small trades, in and out. It's just part of their processes. It's not a sentiment. What is a sentiment is this last position here. We can see here, May, 89% buy, 11% sell, 1 million shares bought. That's good. In May, just a couple of months ago, we did see some insiders buying. All right, and you can scroll down here and see who's buying and what the type of trade is. You can see if it's an automatic buy transaction or share allocation. You can see all of that. So there's a bit of a sentiment there in the right direction. We like that. Thank you, Robinhood, for providing us that information. I do like that. It's a new feature they've just added. Right, let's now go and move on with this review. And I did say there'd be an opportunity for you here to dance with and sing with our new trend on my music channel. This is me performing here with a Dallas cheerleader. If you want more information to this, click above my head down below in the description, and you can see a trend we've got going on here where you can dance and sing along to a pop video I made with a Dallas cheerleader. Very, very exciting stuff, right? Of course, you want to go and do that. The links are above and below in the description of this video. Very nice indeed. We're starting a bit of a trend with my music channel. Anyway, moving on, I'm going to share with you now how it compares to the S&P. Looking at this right now, as you can see, if you put $10,000 back in 21, in the S&P, you've now got 15,000. Not bad at all. Whereas 10,000 has turned to 345 with 23andMe. You won't be so happy with that, of course. Let's have a look at the chart. As you can see, there's not a great deal to show compared to the S&P other than a very, very strong decline. We can't really check COVID conditions, macro conditions. It doesn't go that far back, but we can see if you comparing the two, that's how it performed. We are going to come on to the numbers in a minute. What about some latest news from 23andMe? Let's zoom in and make this as clear to you for you as possible. There we go. 23andMe to offer free blood testing for members in pilot program. This is just out a couple of days ago. 23andMe Holding and Nightingale Health said Friday they are collaborating to provide free blood metabolomics. I hope I pronounced that correctly. Let me try that again. Metabolomics. I'm not a scientist, not a doctor. All right, I'm just an entertainer presenting a review. Metabolomics, testing up to 5,000 of 23andMe plus premium and total health members. The companies said they will use Nightingale's remote health check to measure blood samples for dozens of biomarkers, including cholesterol, apolipoproteins, and fatty acids like omega-3 to provide guidance for potential lifestyle changes. The blood biomarkers may improve the accuracy of optional testing, and 23andMe already provide annual members, the company said. Always good to see. Okay, great. Let's now look at the numbers. If you like this video so far, have you subscribed and rung the bell? Have you? I hope you have. Let's go and look at the numbers. This is what it's all about. This is when we ascertain the true value of a company. Right. We know a little bit about it. We had a look at the website. We've got an idea of what the company is about. Now let's look at the numbers. So, unfortunately, this intrinsic value doesn't use DCF valuation, so we can't say it's accurate. We're looking at it going, it's $2.13. Well, that's great at 42 cents, 10 today's price. However, we cannot say that this is an accurate valuation because of the information the company provide. However, let's look at the financials, zoom in to make it as clear for you as possible. All right, 219 million, the most recent range here, back of March 2024. We're waiting now for the next earnings. When is the next earnings? Let's have a look and see. Now, if you want me to cover the earnings, expected on August the 8th. If one of my members does a super chat, we'll get up early in the morning or late in the evening. As it happens, this is after hours, and we will cover the earnings for you, and we'll do that for you, and we'll provide more news if you want that. Just book it in with me if you want it. Revenue, 219 million, down 11%. Operating income, up 4%, negative 319 million, negative 28%. And we are expecting things to improve, though, negative 667 million. Financing cash flow, negative 15%. Investing cash flow, negative 11%. That's a plus 9.6 million negative. Operating cash flow, it's an improvement of 10%, which is nice. Still negative, though, at 164 million. What about the balance sheet? Balance sheet initially looks quite good. We've got more assets and liabilities. We don't want an upside down balance sheet, and we don't want too many liabilities. We don't want too much cash sitting around without doing anything, and we don't want too much debt. 608 million, and a third of that is in cash. We like to have a company. It's great to have cash, but of course they're just making money from interest payments. Well, you can do that yourself. No point just investing in a company which has a lot of cash. It's okay for Apple and Google and Microsoft and Amazon to have a lot of cash because they're already making lots of money and they hold cash, which they earn interest on. But interest rates are expected to go down soon, so that's not good for a company that just holds cash. We're not investing in a bank that holds money. We want the business to invest its cash to build a stronger business. So it's okay to have cash, just not too much if it's not doing very much. It's just sitting there. 231 million. Do we have any long-term or short-term debt? We don't. So the balance sheet should appear okay. Let's scroll down and find out. Gross margin, 45%. Operating margin, negative 145%. Net margin, down 304%. FCF margin, down 79%. ROCE, that's return on capital employed, negative 51%. Return on invested capital, we've got negative of 71%. And ROE, negative 86%. That's a return on assets. Then we've got ROE, that's a return on equity, negative 122%. If we scroll down here to the profitability score, no surprise, 21%. It's a low profitability score. The company isn't making any money. And as we speak right now, it's being sold off. It's just going down 2.66%. It's a negative report from me so far, and the stock is going down 2.66. Let's look at the balance sheet. 53%. Like I said, the balance sheet's okay, but it just holds cash. It's not really doing that much. If I had $10 and no debts, I would have 100% solvency score. Can't go bust, if you've got no debts and you've got no liabilities. I mean, they've got some expenses, hence it's not 100%. But 53% is okay, but it's pretty much as expected. But what do Wall Street give this? They're saying 49% upside at the lowest level. Average is 213%, or at the highest forecast, 391%. Wall Street seem to like it. There's the competition. If you're using the software that I use, all members can get a free version of this software or a premium version, which basically is free. The discount you get makes my membership for free. It's better than Bloomberg, CNBC. I get the best discount on this. It's the only reason why I partner with them. I don't get paid from them. I don't get paid to make reviews, but I partner with people that provide me the best deals for my members. I'm always trying to find the best deals for my members. As you can see, we got some selling going on, as we reported at the beginning, but it has been decreasing. That is a good sign of selling going down from insiders. What about short interest? Well, we've got a 9% short interest, so not enough volume, not enough short interest to drive a short squeeze. No real news here. This was the last news here was 8 months ago, a long time ago. Not much to shout about there, so it's not getting much attention right now. The last 90 days. Just neutral news mainly, 70%. Negative news has crept in, 42% the last 30 days. The last 7 days, no news. Not a lot going on, not a lot of attention. We might be able to rank for this stock on YouTube, and it might draw some attention to it. So what do you think? What we've learned is insiders have been selling but getting less, and some buying in now. We've learned that Wall Street like it. The profitability is low, but expecting that to increase. We've got solvency. They're not going to go bust anytime soon, but everything right now isn't good for the company, really. We are expecting some growth, but not a lot. Not really. Intrinsic value, well, because of the lack of information, we cannot give it a full valuation. So it is a bit of a lucky punt at this stage. Do you like this sector? Do you like penny stocks? Do you feel there's a potential here? I don't see any major catalyst, nothing really exciting to get into. This is a very, very difficult sector, a very expensive sector. They do have some cash. I would say it's not a buy from me. I would say it's one for further investigation. And to know more about the technology or the science, the breakthroughs that potentially could come. I'm not a scientist. I'm not a medical expert, so I don't like these kind of stocks, because you have to understand what they've got coming down the line. Really understand it, not just looking at charts. It's not enough for this. You need to know what they've got. This kind of stock can explode on good news. So I mentioned earlier in the video that you can have the opportunity to dance with our cheerleader, our Dallas cheerleader, and also sing along if you want to be part of our video. So you can. I'm going to give you that information again. You can sing along. I can't play the audio for copyright reasons, but the links are above my head down below in the description. Join along. Go on one of the little shorts and take part in all of that. It's a lot of fun, and we're creating a bit of a trending pop video here with me in my studio with a Dallas cheerleader. A lot of fun. Anyway, so there you go. For me, it's not a buy, I'm afraid. This is not a buy from me. It's one for more investigation. Click above my head for more information. Down below in the description, you'll find all those links. And over here, I shall put our what should I put over here? Our 23andMe playlist. Yes, I'll make a playlist for 23andMe, and down here, I'll put our Dallas cheerleader. You can go and check it out if you want to join in with our dancing and singing routine. Until next time, as always, take care of yourselves and each other.